We've studied Nike very closely lately, and we basically think that the story and the stock has further room to run here. You know, the lens we're looking at Nike through is as we reevaluate the consumer sector. And this sector is becoming much more digitally focused. And I think Nike is really one of the prime examples of an already dominant legacy company, legacy brand that has very aggressively embraced digital and digital across its business model to both connect better with customers, to manufacture product better. And that's what's really fueling, I think, the results and what's likely to be a strong trajectory for the company for the foreseeable future.
Parker does spend a lot of time lately on the conference calls, especially in those opening remarks, talking about digital and how they're winning and investing behind it and direct to consumer. Are they ahead of their competitors, Adidas and Under Armour, on this front?
Look, I think the answer is yes. Okay, so a lot of companies are pushing this. The companies you mentioned are also talking about digital, but it seems to me that Nike is ahead of the competition here and really using that as a means to differentiate its product. You know, one of the key themes we saw with Nike just over the past several quarters or so is the company fighting back and taking more market share. Now, that had to do with much better product, more innovation, but a lot of that was also digitally backed.
One question is on China. I mean, that's been, as you know, a huge source of growth for this company, continues to grow double-digit every quarter. We are in a pretty escalating trade skirmish with China. If that gets worse and we start to hear about tariffs on sneakers and apparel, what happens to Nike's stock and to its results?
Sure. Well, look, I mean, the situation is obviously fluid, okay? And as we issued our upgrade report this morning, I was talking to my sales team and a bunch of our clients, and that's a key question we're getting. As we look at it right now, we think there are significant levers. I mean, if it needs to happen, we think there are significant levers that Nike can pull with regard to its manufacturing out of China. Now, I think the other real key point here, though, is pricing and pricing power with consumers. You know, it's interesting to me as I study Nike and really this whole sector, you know, the degree to which customers now are willing to pay up for high quality product. You know, one of Nike's best-selling shoes now is almost $200. So, you know, what that tells me is that there's a significant amount of pricing power, you know, to the extent that, and we don't know this yet, but to the extent that Nike is forced to push some type of tariff costs through the system.
Who's going to be the toughest competitor in North America, Brian?
Well, look, there's a lot. I mean, you know, the names you mentioned before, whether it be an Adidas or an Under Armour, clearly, but there's also a lot of upstarts out there. You know, I think that what's happening, we're seeing this throughout retail, throughout consumer. There's a lot of these smaller companies now that are kind of fighting their way into what industries that have been dominated by major players. So there's competition from across the board. But I think the key with Nike is, and one of the reasons we're positive here is that, you know, that competition has forced Nike or encouraged Nike to really up its game. And it's made it a much better company.